Welcome to the Blox Podcast. I'm Chris Manser, and on episode 16 today, we're going to be discussing when is a good time to grow from a sole trader to a company. As always, I'm joined alongside me by Dale Kitchen. How's things going, Dale?
Good, Chris. Big day again today. We've just ducked back into stage 3 restrictions. So, yes, it's not a good day for business. I'm scared about what this is going to cause in the business world. And I think we may start to see the first in the businesses who aren't going to continue starting to close the doors. But yes, it was a big shock, which only came out a few hours ago, and we're still trying to get our heads around what it means for everybody.
Seems like a few more zombie companies are going to pop up now. The ones that maybe went through the whole process to get themselves back, it's could be the final nail.
Well, how long can you not run a business for? So I think we were looking at 2 to 3 months. It was 2 months, just a bit, 2.5 months. And now it's a minimum 6 months. So, you know, you're looking at 4 to 5 months of no trading. I've never seen it before. I've never seen a business come back from such a big hit. There was announcements that there is talks about a $10 billion grant that will help businesses close. I don't know how that's going to work or the details around it, but it was discussed as funding that will be provided to businesses that will help them get out of one business and into another. I don't know how the rest of the economy is going to survive. Maybe it means that the creditors are guaranteed by the government, which I think is where they may be heading with this. So that if you go down owing $100,000 to your creditors, the government will foot the bill so you can just walk out and then walk into another business. That seems to be, well, that's the only thing that I can think of that they're doing at the moment. But yeah, time will tell.
Is this not just an opportunity for bad business people to move into another? Well, if someone's taken on a business model or a business that isn't going to work,
yep,
they're allowing them an opportunity to repeat the same thing.
Yeah. So with interest rates dropping, and businesses taking on more and more debt, that's allowed businesses that should have closed a long time ago to continue. So they've been able to just continue with a downward death spiral. This will just mean they get a fresh start and they can start again. So the normal way of a capitalist market is for things to fail, for people to get tight, for businesses to run leaner and to run properly. Now, this has all been thrown out the window by the government who, as soon as people pop their head up, they just throw another check at them. So it's not targeted enough for my liking. We've had discussions with people who have said that they feel guilty with the money that they're getting. They've had one of the best months that they've ever had, and they're still getting, you know, these PAYG tax credits that everyone else is getting. It doesn't make sense for them to have, you know, an industry like the gym industry or the restaurant industry who's just been totally devastated, just receiving the same as someone who's seen a little bit of a downfall. So, very, very interesting times.
And so I guess a lot of the restrictions are based in Victoria, and it's very, very centred on there. So potentially a lot of Australia continues with the way they're operating and continue to improve. The main issue is it doesn't become stage 3 restrictions in Queensland, New South Wales, and other places. That's when you're running into a difficult situation.
Yeah, and can they really get rid of the virus? It's such a finite target. They were talking that in New York, that the reason why the numbers are down now is because it's already rolled through New York and a lot of people have got the virus. So they've got a bunch of people who have an immunity to it, so it doesn't spread as easily. Whereas we're trying to protect this position where nobody gets the cases. You know, who's right and who's wrong? I don't think I'd like to be making the decision. I'm just wary of a decision that closes businesses for 6 more weeks. With at the end of it, we could really just be in the same position we are now. there's no guarantees at the end of it. I mean, that's the scary part. That okay, let's push through another month. So we're getting to close to September. I'm not hearing a lot of talk about vaccines. They're still in the works. Yeah. What if we got to do another 6 weeks? What then? I mean, how are people going to survive? That's the question.
Where is tourism? Where is travel? That we're not even at a discussion stage with tourism coming back. So the fact that they said end of October and that's not even being discussed as a solid date. So
yeah, international tourism at least a year, they say. So there's a lot of industries that are feeling the pinch.
Yeah, exactly. Well, it really moves on to our small business topic for the day, when you should move from a sole trader and grow into a company. And this came on the back of, we had, was it 3 or 4 customers that are now taking that step, and even in the COVID environment, they've been able to run their business really successfully and are looking to take the next step up to become a company, which we need to really talk about the process around that, the benefits, and how you can go about it and how we help.
Well, there's a big difference between running a sole trader and a company, both from a cost perspective and a deduction perspective. It is a lot harder to run a set of financials for a company. I will premise first, before we get into this is not specific advice. Please consult a professional to get advice specific to your situation. But what we will give is a general guide on the issues that we face. So one of the major reasons why people move into a company is a thing called asset protection, where they take away their personal assets or exposure to their personal assets. And they say, I'm running in a company. So let's say I set up a company, I run the business in that company. If anything goes wrong with it, the liability is limited to the company, so they can't come against any of my personal assets. There's been a few changes in recent years that say rentals, they get you to sign personal guarantees, which means that you have to personally pay the debt if the company can't afford to pay it. Also, if you want to get any type of credit account with a supplier, they also ask for a personal guarantee. So that side of thing has been a little bit diminished, but not a lot. But there's still a lot of area for personal protections. Let's say you have a job that goes bad, you have a situation with an employee, all the liability is basically limited to the company. So as your business gets big enough or to a level that you can then afford successfully to pay for the processing of the accounting, the reconciliation and all that sort of thing, we sort of let people move on. That number is generally about sort of $200,000 turnover. Once you get around about there, the business tends to grow from one person to multiple people, and it takes on a lot more risk in that stage. So when you're under 200, you really, it's just you doing your thing. You don't really have to distribute money anywhere. You can keep everything in your own name. Money comes in, we can pay tax on it. Once you start to get over that $200,000 turnover mark, you start to get to a level where we need to do a bit more tax planning. We need to take on more people into the business. You need to move that out of your name into its own sort of entity. So I know a lot of we get a lot of people who call up saying, I want to start a company. They think that's the first step in starting a business. It's not. I always say to people, start, if you're going to start from zero, start with a sole trader, no GST, and then as you get up to that $75,000 mark, then you register for GST. As you get up to the $200,000 mark, you register for you can roll into a company. The benefits of that is it gives you the experience to learn from a very easy sort of basic structure to a more complicated structure with this company where you've got to worry about wages, single touch payroll, yada yada yada. So yeah, it does help that people should learn to crawl before they can walk before they can run. it means that when you do get to the company, you do understand it a lot better.
Okay, so sort of the takeout companies, asset protection, look
Yes.
to move into a company at 200,000, and also that limited liability, taking a little bit of personal liability away if situations go bad and there's ongoing disputes or whatever else. Also,
There's also...
Keep going.
You go. No, you go.
I just wanted to also say, with starting as a sole trader and no GST, it becomes, as you level up each level, it really becomes an achievement and something you can sort of be proud of, as opposed to beginning straight as a company. The changes, it just confidence and education grows throughout the whole process.
Yeah, it's like, I think there should be L plates for people in business, and I consider that to be a sole trader, where you can make mistakes in a sole trader and there's no consequences. If you have less control about the way you handle money, less discipline about the way you run your business, it's very hard to work out of a different entity than it is a sole trader. A sole trader is very forgiving in the way it runs. There are a lot of unforeseen technical issues that come about when you run a company and you run it very laissez-faire. There is also a bunch of tax benefits that come from moving into a company. So it is a more efficient tax structure to work from. Also with trusts. So with family trust, that's another area that we tend to move people into. You can then start to set up, group structures where you separate things, and it sort of grows and grows and grows. So I always say to people, don't be in a rush to start a company. There is no rush. You should be in a rush to understand how business works and how things operate, to learn the basics before you get into the more technical.
Okay. So I've successfully run my business for a couple of years. I'm starting to make good money, and you're recommending me to now move into a company. So do I need to have one? How many directors do I need? What is the process from, yes, I'm ready to do it, and I've educated myself. I've looked on Victoria Business website. I understand what a company is, and so what is the process behind? What do I need to do?
I'd say talk to a professional. Setting up a company in a poor structure is an ongoing problem that becomes very hard to fix once the company gets running. So if you set up a company poorly, it's very hard to fix in 5 years' time once that's making a fair bit of money, owns a lot of assets. So I'd say first protocol, talk to a professional. Once they've set it up and they've sort of started advising you on how to be running things, I would say that the next thing is to sort of, you pick your name. If you want to keep the same name you got, you can roll it over. Basically, you work out what other things need to be moved into the company, so insurances and things like that. Set up a bank account, register the company, and away you go. It's not that simple. There are a few other things, but it's not that hard as well. We generally try to do things at 30 June, so there's a clean cutoff. So at 30 June of whatever year, you'll leave your sole trader and move into the company for the next year, and then you just have a full year's worth of figures that you're able to work from. So so that's sort of the first step. I think it's a case of just talking to someone, talking to professionals, and they'll help you out, basically. So the more help you can get, the better off it's going to be. It needs to be ongoing discussions that you have with people. It can never just be a one-off. You'll never learn everything. I find that people misunderstand a lot more by looking at all these websites. So, call someone, chat with them. That's the way to go.
Yeah. So can you suggested doing it June 30. Can you migrate during the year?
Yeah, anything. You can do anything, really. So it's optimal to transfer at June 30, but it doesn't have to be done. Generally, if you're having really fast growth and we really see a need to move things across, we'll move things mid-year. But if not, we generally try to do it that way. So it's something that should be planned for a fair period of time. You can always, it's a long lead up time to it, but there are instances where things go boom, and then you just go, well, we have to move things. Also say that the family trust or the unit trust is another it's another widely used structure. So without complicating things too much, just think of a family trust and as a company and as a unit trust, all is the same sort of thing. It's a separate business or a separate entity that you run your business out of.
Okay, so the trust is on top of the trust runs the company.
We'll just leave that.
Okay.
Yeah, well that's another day's conversation.
But
so I
keep going.
The technicalities of trustees and beneficiaries and all that sort of thing, I think there's a video in that by itself.
Yeah, definitely one on trusts. I think, like you talked about, education and leveling up, understanding the company first before you can then educate yourself on a trust is probably the way to go. Because if you're trying to educate yourself on a company and a trust at the same time, you're going to get lost. You're going to get lost in the weeds.
Yep, definitely. And if you don't understand them, that's fine. Just have a good advisor, and then you'll be fine. And then you can pick it up as you go.
Yeah, so, I think professional advice is ideal. And also, to really assist it is doing a little bit of your own research so you can have a real base understanding of, or even have a few questions that you can hit the advisor with or the professional to then improve your knowledge, because we find that a lot of people come in with no understanding and it just goes in one ear and out the other, which is not the way you generally learn. You can't listen to advisor and be expected to completely understand 10, 15 new terms gets thrown at you in a 20-minute, half an hour meeting. So I think a little bit of Victorian business website provides a lot of information. Our website has articles around company structures, and that's the key to actually benefiting from a meeting with Dale or with myself in an advisory setting is doing your homework as well. That's it. That's how we can do all the work, but we'll provide it to you. And if you don't understand it, it's hard to then execute from your point of view because you're not fully understanding the terms and what we're really trying to achieve.
It's surprising how much better a meeting can go if you understand what we're talking about, and that's the whole purpose of most of these videos. If you can start to educate yourself, the meetings go a hell of a lot better, and you get a deeper insight into how things run.
Yes, and so our aim for today's podcast was to give you an understanding of what a company is, and it's not a scary thing to go from a sole trader to a company. It's an achievement. You would say that?
Definitely. Yep, 100%.
And sort of the keys, the benefits, the tax efficiency, asset protection, limited liability, and then sort of running through the process to show you that it's a big deal, but it isn't a too complex deal if you have a little bit of understanding and advice from a professional going through.
Well, I come from the day when companies used to be quite expensive to set up. So they used to be $3,500 to $4,000 just to set one up, and you couldn't set one up. I think that was even prior. Internet was just coming on back then, so there wasn't an online instant sort of setup. It was it may have taken you a week or so. So the company wasn't used as much as it is today. So, someone basically, what happens is someone will start a business and they'll start a company. That's not what I've learnt, and that's not how I was sort of brought into the game. I don't agree with it. Most people don't care. I think the costings of running a company far outweigh the benefits when you're under 200,000. So I think that money should be spent on things such as advertising, growing your business, rather than paying for accounting fees and year-end fees and lodgement fees and processing fees. So it is a cumbersome structure, but but it is that way for a reason, and it is beneficial when the time's right. So don't be in a rush to do it. Put your time in and wait for it to happen.
And the last key question, what budget are you expecting set up, ongoing costs from an ASIC point of view, as well as accounting and tax advisory? What are we sort of looking at? Is there a range?
You probably look between $1,000 to $1,500 on setup, depending on how complicated it is, depending if there's multiple shareholders. Once you get into multiple shareholders, you've then really got to involve the legal team, and they've got to write up agreements which start to run into the sort of the $4,000 to $5,000. So if it's just you and a mate, there are a lot of conversations that so that's another topic. So there's a lot of conversations that you should be having if you're going to go into a company with somebody else. There's a thing called a shareholders agreement, which sort of details how the whole thing's going to operate. Probably leave that for another time, but that sort of adds a lot of cost to the setup, depending on what you intend to do with the company. You may get more of a technical structure. There's different levels of shares. There's different voting rights in the company. So there is a lot more technical way of setting it up than I'd say 95% of the companies out there. But if you're looking to do something specific, like sell it or get someone to buy into it, or raise capital and that sort of thing, you can set them up in a way that's more beneficial and that has more benefits long term. But you're sort of planning on those things happening. And I forgot what the original question was.
The budget, the price budget. You pretty much
the budget. Yeah, okay.
Monthly in ASIC, is that more expensive than normal, or is that much in line from a monthly accounting point of view and ASIC fees?
A lot more, yeah. So with a company, you're sort of running the sort of $500 a month. Just sort of that includes all your processing, your wages, your accounting fees and all that sort of thing. You've then got your ASIC fees, another couple $100 a year. And it's just, whereas if you're a sole trader, you could probably get by with $300, $400 a year in just additional fees. So the cost is significant. It's probably about 10 times, even more. But the once you do have a significant amount of money going through the business, the savings that you can get by running that sort of a structure far outweigh the cost that you're going to pay for it. And also the protections that you get around it sort of, that's when they start to come into play. So if you're under that, you're not really going to do it, because I most of the time, 95% of the time, you're just going to dump all the money into that one person's name, 200,000. There's not a lot you really need to do that's going to make a huge difference in regards to the sort of the tax planning. But once you do get above that, you need to start thinking longer term, planning longer term, building up just ways of the business running that then give you benefits.
Yeah, and you always remember that all the accounting fees are tax deductible, so it's a 30% discount all year round. That's what we like to tell people. You get tax back on all of that.
But monthly fees and the thing that we go through do help you in able to have those discussions with people. So I always suggest that people do pay the money when you can. You do so that that's how it works.
Yeah, and you're spending money for growth. It's simple
exactly.
as that. You're not
investing in your future
to be thrown out the door. Well, that pretty much covers off the transferring from a sole trader to a company. What I wanted to touch on quickly is a bit of tax for you news. So we've got a new girl coming on board this week. She'll be around.
Was meant to be today.
Yeah, so it's Tuesday here, so it's pretty late when we're recording this, so it should be starting on Wednesday. But we've got that.
So that is good. I mean, things are getting far too difficult to keep up with. We need someone who's going to keep us in check on a certain few things. I think that's important. I think it's important to designate important key tasks to other people. So, we've looked to bring someone on to sort of fill that role. I'm looking forward to it.
And she'll also be looking to implement the referral program that we potentially put in down the track, where we're going to provide benefits to customers that are able to help us get in touch with new businesses that are looking for accounting services and business advisory. So we'll probably talk about that maybe next week or the week after. But anything else you want to finish with, Dale?
I just think sort of the reasoning behind the additional staff is we talk about a lot of things. We sort of set up plans for a lot of things, but then we get sucked away with other people's issues. This is someone solely set aside that's going to push those jobs from start to finish without any sort of without any excuses. Basically, I think it's important for everybody to do, and I think it will pay dividends because it basically guarantees that if we start something, it will get completed. If we need to pivot, we can pivot, and I'm thoroughly looking forward to it, and I think it continues with our ethos of always investing in growing and continuing to step forward. And it's like I think it's probably the way that we think about things is 50%. Are we doing things well? What can we be doing different? What changes do we need to make? And 50% actually doing the work. I think this sort of further reaffirms our commitment to that, and let's see where it takes us.
Yeah. And so COVID is back to the beginning with restrictions, but Tax for You is pushing forward and starting to really take on new customers and new growth.
Take some of that government coin and put it to good use.
Yeah, exactly. Exactly right. Okay, well, I'll chat to you next week, Dale.
Thanks, mate. Speak to them.